Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, February 21st, 2020. Please hit the like button, subscribe to this channel, and share this video with others. Especially subscribe to this channel. We already got 1,000 subscribers, so let's keep pushing to 2,000, right? All right, so we're looking at stocks, and the virus news are not getting any better. In fact, they're getting worse, and there is now already quarantines in the United States and worldwide for that matter. So no cure has been found yet for the virus, and the stocks just keep going higher. So wall of worry. We just keep climbing, keep climbing, keep climbing. When is the uh, rollover going to happen? We'll try and guess. However, for now, the rally continues. Lots of new highs, broad rally still continues. We'll look at example as solar just went to 72% gain for one of the trades recently, and junk bonds haven't yet made a new high, so this could be concerning for stocks. Treasuries, on the other hand, are approaching new records, so this is showing fear is increasing in the markets. We'll look at oil and copper. Is it possibly getting ready to short it? It's looking good right now, or soon maybe. And dollar broke out, euro collapsed. Could go to uh, parity with the dollar. Gold moved to new records, I think 7 or 8 year records. So we're trading it on the upside. And Bitcoin could be ripe for shorting pretty soon. Okay, so S&P 500 once again is pushing higher. You can see new records being made actually just on 19th of February, a couple of days ago. Now we pulled back a little bit. Obviously, nothing of major concern yet. This drop here from 22nd of January into 31st of January basically was bought immediately, and we are still trading stocks on the upside. So we're looking for opportunities to find somewhat oversold stocks and to enter them on the long side to buy them. QQQ also made new records. This is again great news for general stock market. Rally is broad. This is a very nice move. You can see we actually traded QQQ on the upside. Here's the latest one. I know it's a while back, but this is the reason why we have many different stocks that we monitor. And thus we have something that's happening almost on daily basis, some kind of a alert or some sort of a opportunity to buy. Obviously, there is no opportunity to buy QQQ. Latest opportunity to buy QQQ, the Nasdaq was last year in June. There's where I'm hovering. Um, Now, these indicators you can see on this chart, you can see the green, the blue, the red, and the yellow line. These are my proprietary indicators called MasterCharts Trading Price Action Indicators. You can get them on TradingView.com. So, uh, overall very easy to trade. We just wait for a dip towards the blue line and then a close above the blue line. And this is where we basically buy. So this is what we did for QQQ about, in June of last year, but it doesn't matter. We're still trailing this higher, and eventually we'll start taking profits and closing the positions. Same goes with Dow Jones. Here's Dow Jones. You can see that the gain was almost half of QQQ. So it's not that Dow Jones is doing something different. All stock indices they correlate highly to one another. In other words, they kind of move in lockstep. So Dow Jones, you can see, moved in lockstep with QQQ. It's just that QQQ gained 35%, while Dow Jones only gained a little bit close to 18%. So literally half. But overall, same thing. You can see opportunity here in May of last year, and that was it. We only look for opportunities to buy when we have a pullback towards the blue line. IWM small caps. Uh, Opportunities for small caps occurred actually relatively recent. Here's one in September, and all of these opportunities, as far as October of last year, were pretty good. Another opportunity was right there on the 3rd of February. We did not trade it. Sometimes I make a decision just based on price action and based on the current situation in the world. I decided not to send an alert here. But if you have my indicators, and you can have the same lines on this chart as on this chart on your chart as well. If you need to find out how, just ask me at MasterChartsTrading.com. So sometimes I don't make a decision. Sometimes I make a decision not to trade it, and this is one of those days. So here are the various uh, stock sectors that recently broke out. XLK, very similar to QQQ, but even uh, more concentrated, I guess. And you can see an alert here in June of last year. Went to fresh record just recently, close to 40% gain. Uh, right this instant, you can see that various offensive and defensive sectors, and offensive like technology, just made a new record. So overall, the situation doesn't seem to be too bad. Perhaps investors think that the cure for virus will be found. XLY, consumer discretionary, also made new records recently. Again, you can see that it underperformed QQQ, but it didn't actually, uh, you know, went the other way. So, in other words, again, in lockstep. So, correlation between different funds is very high. It's just a matter of finding, I guess, opportunities. So, discretionary technology, consumer staples, new records. Yeah, it's a little bit of a defensive sector, but it doesn't mean it's going to be, uh, it doesn't mean that it is a not part of the market. So for XLP, consumer staples, the latest opportunity was actually about almost a year ago. You can see a nice breakout here and 20% gain. Real estate, IYR, also went to fresh records. So generally speaking, it's even though it's kind of like considered a defensive sector, overall it's still a stock sector because real estate investment trusts are still stocks. So we're looking at them from point of view of this being a part of the stock market, definitely not a part of the bond market. So you can see real estate made a new record. Yeah, it's a defensive tilt, but I wouldn't really read into it too much. I would just read into the fact that real estate is part of the stock market. And here's the utilities XLU. Another argument can be made that these are defensive in nature utilities. Yes, they are defensive in nature, but they are again part of the stock market. And when or if the bear market starts, you will not be able to hide in utilities. The utilities also do get sold. So this one actually about a year ago, same thing, about a year ago with 31% gain. Uh, Very simple, same thing. We just look for a close above the blue line where I'm hovering, where the arrow is, and then we just buy. And you can see there was no opportunity, so nothing to buy. Okay, here's a kind of nice move. I'm kind of proud of this one. This is Solar 10, Solar ETF. You can see it just went parabolic here. So these guys move a lot more than various sectors, but you can see also there are their alerts. In February of last year, March of last year, and April of last year, 3 alerts. These are again were sent to my subscribers. And at that point, we just simply sit and we trail at the blue line. I usually trail at the blue line. Let me zoom in on this price action here. around November of last year, and you can see that there was no touch of the blue line. And this is what I usually do. I want to see a touch of the blue line and a close above it. There was no close above it, so this position from last year basically would have been still open, and all of a sudden it just took off, 72% gain. So most likely there are some solar stocks that are just breaking out, and yes, they are very volatile. So sometimes we can ride them up, even though, or rather, sometimes we can ride them up and just enjoy the ride, basically. All right, let's switch gears a little bit and let's look at bonds. Here are the junk bonds, J and K. So again, I want to point out how wide apart the lines were back here. You can see there was enormous distance between the green and the yellow line. Look how narrow it is right now. So green to yellow, very narrow. So what does this mean? This means that if the price, decides to go lower and close below the yellow line, that would imply a bear market for the security. Now, junk bonds and stocks correlate, or in other words, they go in lockstep with one another very highly. So, for example, here's the breakout on junk bonds, and just a few weeks later, there was a breakout on stocks as well. So let me show you that breakout. There's that breakout in February of last year, and there's the breakout for junk bonds in January of last year. So very close. What does this mean? This means that we're still seeing more or less a correlation between junk bonds and stocks, which is a good thing. We want to be continuously seeing that. If there is a divergence, for example, stocks going higher, but junk bonds are not, so that would be a warning sign. And right this instant, you can see a new high here in January of this year, but not yet a new high for the junk bonds. By contrast, S&P 500 continuously made records. So who is correct? Which one is correct? Is this divergence something to worry about? Uh, it's possible, especially with such a narrow trading range. I think we could easily see a push lower and junk bonds will be like the first canary in the coal mine. Not yet, it hasn't happened yet, so just need to be on the lookout for that. TLT, the treasuries, the long dated treasuries, again are moving higher. We can actually check on the equity curve, yield curve. So yield curve basically shows the various length, uh, uh, various length of securities, uh, treasury bonds, and you can also see the yield of them. So right this instant, where I'm hovering, the 3 months yield is already above 2, 5, 7, 10-year yields. It's approaching 20-year yield and 30-year yield as well. So uh, when or if this happens, this has happened in the past, for example, here in 2007, and then again back in 2000, and you can see that afterwards there was a drop in the stock market. Does it happen every time? No. Additionally, the way things are going right now, it feels like the Federal Reserve will just continuously stimulate the economy with QE, and so that would mean that you know even if we get negative yields, it wouldn't actually matter because it looks like the Federal Reserve is really committed to uh, just keeping the stock market rally going. But in the past, the inversions of the yield curve did lead to a bear market. So this is something to be, on the lookout for. For now, TLT, we are trading TLT. You can see a couple of alerts here on January and then another one late January and very nice gain already. So this is about 7% gain or so, and I would still be holding this position basically. Okay, let's switch gears. Let's look at various commodities, and I'm looking at oil here. Oil collapsed. I think it has to do with the virus and the demand for the oil. Um, I wasn't able to short here, just late, basically, the party on 23rd of January, but it would have been a successful trade. Now I want to wait for a bounce towards this red line, 55.79. Again, you can find out more about these lines by going to MasterCharts Trading. And once it touches the red line, I want to see a close below it, and then we can short afterwards. So we can use options on USO. We can also buy, so we can buy puts on USO. We can also use the actual futures if you have an account. If you're in Europe or non-United States, you can use a CFD, US oil contract for difference, a so much more useful instrument that is unfortunately not available in the United States. But in the United States, we can use put options on USO, or we can also buy um, uh, SCO, short crude oil. So once or if it gets there, it hasn't yet gotten there. Another collapse in price. Again, I think this has to do with demand for copper, and if there's virus fears everywhere, there's no demand for copper. And right now, I want to wait again until it gets to about 267. If it gets there, we'll look for opportunity to short. There's really not that many ways to short copper. Um, I think there may be some ETFs, but they're not very high volume. So you'll just need to use the futures, or if you have access to CFDs, so you can trade copper that way. Let me see, it's there's copper CFD. So kind of slow loading, but yeah, overall you can see the rather the shape of the curve is very similar. So let's wait until it gets to the red line and then try and short it. Dollar broke out, and there's the resistance. I showed this February 5th. The resistance was overcome and it just took off. So this most likely has to do with the collapse in euro prices. And there's the euro versus US dollar. Um, at new low, and the latest opportunity to sell it, to short it right there where I'm hovering on 3rd of February would have resulted in 282 pips move. So again, overall, just beautiful move. And I did not send these alerts. You can see they're purple in color. Now I don't normally send, this is just for information purposes. But again, if you have my indicators and you're trading euro, then this is just a very easy way to do it. Okay, so all of this turmoil is definitely helping precious metals. Here is a new high for them for gold. I think it's a 7-year high, XAUUSD. Uh, we do trade it. We did trade it. Again, the latest opportunity that was just an excellent opportunity was back in May of last year, and this resulted in a sweet 28% gain. The reason being is because you are going to be trailing at the blue line and continuously advancing your stop. So overall, just an incredibly nice trade. And if you're holding it, congratulations. Finally, Bitcoin, BTC USD. This is, I think it's in a bear market right now. So this is an actual alert right there on 1st of February. Hasn't yet gone in our favor, but it's approaching the same level where I would be quite comfortable shorting it myself. So that's something to keep in mind. I will update on the robot progress in a few weeks, probably next week. We are trading the cryptocurrencies right now uh, on the hourly charts. So let me just briefly show it. So we're trading right now this 5 cryptos. Um, there's BTC USDT, for example. We're trading them on hourly charts. Uh, I think I already showed Ethereum versus US dollar was just an incredible move. Well, before that, there was this. This is the move I'm referring to right there. It's a almost 70% move. You can see right there where I'm hovering 27th of January of this year. Remember, this is an hourly chart. So this is a robot. A robot caught this move. Our trading bot went ahead and opened the position here with just a sweet, sweet move. So we are, looking also for partners. We're looking for potential investors as well. So do come over to Master Chess Trading and sign up there. All right, so now that the presentation is over, head over to MasterChartsTrading.com. That's MasterChartsTrading.com, one word. Click on sign up where I'm hovering, and then sign up for one of the services. Now you can have alerts, trading indicators, and both alerts and the indicators. And once again, the indicators are these lines on the chart. So we send alerts. For example, here is solar 10. So solar ETF gained 72%. Uh, yeah, we hold our positions for a while, but overall, it's just a easy way to trade. So there are some, for example, Albemarle, another alert was recently sent. There's the alert right there. I like the breakouts. So there's the breakout on the 16th of January and a 23% gain. So these are the alerts or newsletter, and you get all kinds of alerts. We trade just pretty much everything under the sun. We have about 200 to 300 stocks that we look at, and also commodities, cryptos, etc. And of course, you can get both alerts and the trading indicators. Now, trading indicators are available currently for TradingView.com. This is TradingView.com interface. It's not available for other interfaces yet, but hopefully soon will be. So these are the alerts and indicators. At the price levels, I think you're getting a steal because you can make money back within just a few weeks, really, if you have a nice trade. So sign up, share this video, and have another great trading week. Bye bye.